Hey guys, welcome back to another weekly recap video. My name is Alexander Nikitin. I'm a professional trader and a developer of pattern search software. So what I do in these videos, I actually give you some lessons and I explain how you need to evaluate your strategy. I am showing you the way to objectively evaluate your strategy. If you do objective evaluation, then you can compare your results with your backtesting results. And if the results coincide, then you should stay calm and continue trading. And if the results don't coincide, then you're most likely doing some mistakes. Okay, let us start then. First of all, I need to download the data from my broker. I will do it twice. First of all, I will download the data for the last week. This is my weekly recap video. That's why I need to calculate some weekly performance. And then I will download the data for the period that I'm doing real-time trading of my monster pattern search manual strategy. Monster pattern search manual strategy that I am applying right now. Okay, first of all, weekly performance. To do it, we need to change the custom period. Instead of all history, we should go to today and start from Monday. Monday is our beginning. Today is Saturday. Okay, the data downloaded. Then we need to go and save it as report and change the extension from HTM to XLS. This will open the statement in Excel like this. Okay, perfect. So what I am to do here, how I do my evaluation. I first get rid of the things that aren't needed. Get rid of this, yes, and let's get rid of cancel trade. They aren't needed also. I will do some filter. I will select all and then I only select cancelled, and then I will select them all again, and then I will delete those cancelled trades. Only cancelled trade disappeared, other trades stay. Let me disable the filter this way. Okay, if you do your back testing, what you need for your back testing, what data do you need? You need this. First of all, you need the type of your position. It should be buy or sell. Then you need your asset. It should be euro, dollar, euro, yen, whatever. It is called item here, but it is asset actually, your pair. So the type, pair. Then you need open price. Then you need close price. And then you need close time. So only these things. 1, 2, 3, 4, 5. Other data is calculated based on these 5 columns. They are mandatory columns. Okay, so here is my profit in some money. What is actually that profit? Some amount of pips that I calculated multiplied my position size. That's why we have it this way. Let's do the calculation. I have commissions, I have taxes, I have swaps, I have profits, but I don't have pips. How many pips I generated on these trades? And to calculate that, I am to type the formula. It states if, open the bracket, this one, the type equals buy, in quotation marks, buy. This means that we have some text. That's why in quotations. Then do this, close price minus open price. If it's not buy, else minus open price minus close price. Perfect. And this way I will have the amount of pips, but it will give me a double value, decimal value. I want the value to be integer. That's why I am to multiply 10,000 because of 5 digits of my broker. I have 32.9 pips. Perfect. Let me stretch that to the downside, and the formula will be copied in every cell. Every line will be calculated a similar way. Well, here on some pairs we have thousands of pips. Do I actually generate thousands of pips? No, of course not, because yen pairs are 3-digit brokers. That's why instead of multiplying 10,000, I were to multiply 1,000. Yes? Okay, let's go home. Let's go to filter and let's find some yen pairs. Yen, not yen, not yen. Okay, no, yen. Yes, done. This way I only have yen pairs displayed. I will change the formula to 100, yes, 100, and I will stretch that to be similar in every line. So now instead of thousands, I have these smaller numbers. Perfect. Let me go disable the filter, and now I have perfect amount of pips. So let's calculate the total. How I calculate them? I start from 0, and every time the trade is closed, I add something to my previous amount. This equals previous plus what I have generated. Now you see I am 32.9 up. Next trade, and I am 53.5 up. Next trade, and I am minus 3.5 down. Yes? Next trade, and so on and so forth. Till the end, let me stretch, and it goes here. Now let me select this whole period, this whole number. To do that, I press Ctrl Shift downside. Downside means that arrow on your keyboard, Ctrl Shift arrow down. Go to insert, go to charts, insert the chart. Let me cut that from here and let me paste it on a separate sheet. Copy, paste it here. Okay, perfect. Let me stretch it to line 27 and let me stretch it here as well. Not the best chart in the world. I've been rising, generated 230 pips, then I lost everything and even more, and then I recovered, and my week ended up being 25.3 pips. This is my end of the week. This is my result. Okay, now we know how many pips I have generated. Let's find some percentages of my account. Okay, let's go here. First of all, what I am to do. We know the account I have right now. We know how many, what I have generated, the amount of money what I have generated. But what I have started from, we should calculate it this way. It equals my account minus closed profit. So 699.29 is the initial account. Let me change this and let me call it gain percent. So what is the percentage that I generated this week? And the percentage for this week equals closed profit divided by initial account. So roughly 2%. Let's go here. 1.95%. Okay, so now we have that amount. Then let's do some calculation for no, let's don't do that. I will do that in my next spreadsheet. Let me open my special journal that I do every week, and let me type week number 9. Okay, the amount of dollars generated this week is this, $13. Let me copy, let me go there, and let me paste the number. Okay, next, the amount of pips generated, 25.3, we just calculated that. Let me copy, let me go there, the amount of pips here. And the amount of percentages is this. Let me go copy my percent gain. Let me go to my journal and paste it here. Okay, done. So the total amount of pips is 2,264, and the total amount of dollar gain is 217, up from what I have started from. Okay, so I will not close this because I will do the calculation of the whole period. Yes, as I promised to you, the whole period, all 9 weeks. So, and after I calculate that, I will compare my weekly journaling and my trade-to-trade journaling. Okay, close this, don't save this. This was a weekly performance. Now using this strategy performance. Again, I am to download the data from that period. The initial date is August 21. This is the first day that I started applying this method on my real account, on this account. So now the data downloaded from my broker's service. I am to go and do the same. Save as report, change the extension to XLS, yes, replace the existing one, replace the one that exists, allow that. Okay, let's repeat our manipulations. Delete this name, then delete cancelled. I will do it a bit faster. Select cancelled, delete rows, perfect. Home, disable filters, type the formula. It equals, if this cell equals buy, then close price minus open price, else minus open price minus close price. Done. Multiply 10,000. Okay. Yes. Let me turn them into numbers. Number. Okay, done. Copy the formula to other cells. Let me delete some depositing. Delete depositing line. Another depositing line. Delete. This is my broker's cashback. I receive it every week, almost every week. Okay, perfect. Next, sometimes I have thousands of pips. Go in here, go in home, go into filter and choose yen pairs. Yes, not yen, yes yen. Not, yes, not. No, yes, no, yes, no, yes, no, yes, no. Okay, perfect. Now I have only yen. Here I am to change that, multiply 100. Done. And let me stretch that till the end. Replace all the formulas this way. Perfect. Done. Disable filters. Okay. The formula 0 starting point. This equals what was previously plus my result. Perfect. Going next. Stretching to the downside. Okay, this is the amount of pips. 2,264.7. Let's go back to our journal. 2,264.7. The amount of pips coincides. Perfect. Nice. So I'm sure that my calculation was done correct. Let me save it and close my journal weekly journal. Let's do the calculation of my performance for the whole period. Control Shift arrow to the downside to choose that line and insert some chart. So the chart looks this way for the whole period. Let me cut that and let me paste it here. Stretch line 27 is my best line and stretch it here to S. Okay, you can see that I am not always winning. My strategy has both winners and losers, winners and losers, winners and losers. And the probability, the gambler's paradox, it says that I don't know what I will have. Either I will have next being a winner or a loser. And it doesn't matter how many winners I had before. Even if I had a winner, a winner, a winner, and a winner, my next outcome can be either a winner or a loser. It doesn't say that because I had lots of winners previously that my next trade is most likely to turn into a loser. That's not so. The gambler's paradox says that I always have the 50% probability of this outcome, but out of the course of hundreds of trades, after the course of this amount, I have let's say 60% of being winners and only 50%, only 40% of being losers. And one more thing, guys, you should keep it in mind firmly. You should imprint it into your mind, and it should become your second nature. Your strategy has both winners and losers. If you will try to avoid losers, this means you will self-sabotage yourself. This means that you will try to avoid winners as well. If you don't want to lose, you don't want to win. Think about your losers as being investments. If you do the investment, you have the return on investment. If you don't do the investment, you have nothing. Okay, so every time I've been investing, and then boom, this is a return. I've been investing, boom, this is a return. Another investment, boom, another return. Right now I am investing and I started to get the return. This is business. Think of it like a businessman. It's not that right or wrong game. You can't be always right. Just do what is needed to be done based on your backtesting. Let's go back to statement. Let's calculate some numbers. Yes. First of all, what is the amount? Again, what I have started from. This equals my account right now minus my profit. Okay, I started from 495. What is my percent gain? Gain percent. It equals my profit divided my initial account. Let me turn it into percentage. Okay, roughly 43.88% gain over the course of 9 weeks. It is actually 9 weeks. What is that? 2 months and 1 week? 2 months. Over the course of 2 months, 43% generated. Let's calculate some other stuff. What I mean, let's calculate the amount of total trades. Total trades. And it is calculated pretty simple. Let me show it to you. You just take your trade, yes, and stretch that to the downside this way. Okay, this is the last trade. And look here, count is 255. This count, 255. And type it there. Total trades, 255. Perfect. Let's go next. Count of winners. Winners. Count. And be careful here. Be careful. You need to do that calculation this way. Sometimes you have zeros, yes? Sometimes you have zeros. But sometimes you have slightly negative. This actually is a zero. This is a break-even trade, but because of some slippage or commission or whatever, we have them slightly than zeros, slightly less than zeros. Here you have the same. What is it? Sometimes here this negative is obviously a loser. It is minus 30 pips. But this somewhere around the zero, it is actually a break-even trade, but it was slippage. This 3 pips. Absolutely, I was never risking 3 pips. My minimum stop loss is 10 pips. I will never enter the trades with 3 pips stop loss. So this is not a stop loss. This is actually a break-even trade, but some slippage or whatever. Maybe the spread was widened on news and it hit my stop loss earlier actually than it should be planned. Okay, so to calculate that, I will teach you how you need to calculate that. Now you should go winners count, yes? So type this formula. This equals if, yes? Logical test. This means what? Within this range, no, not this way. It should be this. Count, we are counting. Count if, first of all, choose the range. The range is those pips that we have, yes? The range is the pips. Choosing this range. Okay, now we have this range. It looks this way, yes? And what we should count? As I told you guys, we should, I never have a stop loss less than 10 pips, yes? So I should calculate everything that is more than minus 10 pips, yes? It should be more than, let's say, minus 8 pips. Minus 10 is, no, I have maybe some 10 pips stop losses. Let's say minus 8 pips for sure, that we don't count those actual stop losses, yes? I never place the trades minus than 10 pips, but if we type it this way, we will stay for sure that what is less than 8 pips, yes, less than minus 8, it is a stop loss. But what is more than minus 8, it is either a winner or a break-even. So now we will have the amount of them, 142. Let's calculate the losers. And it is pretty simple. To calculate the losers, it equals the amount of total minus winners. This way we have a losers. Yes? Okay, let's calculate the percentage. It is called accuracy or probability of having a winner. Accuracy. And accuracy of my strategy, it equals this way. It equals winners divided total. So it is 55%, not that much, 55%. You see that? And of course that if I calculate probability of loss, let me type it this way. And if I do it this way, 1 minus this percentage, oh, no. It should be equals 1 minus the percentage equals 44% is the probability of loss. Probability of winner is 55%, roughly 55%. Well, I should say that I slightly stay less than my backtesting result says. My backtesting result says that I should have somewhere around 58%. But you should keep in mind about your statistic error. The statistic error is 3% deviation. So if I have 55.69, then it stays within the statistic error. I don't make any mistakes, and that's okay. That's okay. It is 2.4% less than my backtesting says. So it is a slight deviation, slightly worse than I had on my backtesting. Okay, another thing that's good if you have the accuracy of 55%. If you generate at least 1-to-1, your winner should generate at least the same as your loss. Yes, this is called the average risk to reward. To calculate that average risk to reward, I am to first calculate the average winner, then I am to calculate the average loser, and then I am divide the average winner by average loser. Okay, let's type it. Average winner. Perfect. Here, let me choose this formula. Where is that? Here it is. Because it will be very, very similar to that. Copy. Average winner. Oh, no, don't do that. Undo this. Copy. And then I should release this. And then I should go here. Average winner. And then I should paste it here. Okay, so instead of count F, yes, calculate average F. Average F within the range of our trades, yes, our pips, and what is more than less than 0 should be calculated as average. So the average says that I am 45.50 something pips. Oops. 45.19. Let's calculate the average loss. Average loss. And it equals the same formula, but instead of more, we should type less. Control C. And here, Control V. Less than -8. Less than -8. Perfect. Done. -36 is my average loss. Generate more, losing less. So what is my risk to reward? Risk to reward ratio. Actually, it is reward to rating, but it doesn't actually matter. It doesn't matter that much. It equals winner divided by loser. And you see the loser is negative, yes, and risk to reward should stay always positive. Let this be minus loser. Okay, my average risk to reward is 1.22. 1.23 roughly. So 55% of the time I on average win 1.23, and 44% of the time I am losing 1 roughly. So this says this. These are the two main numbers for strategy evaluation, the accuracy and the average risk to reward ratio. The two main numbers. If you don't know these numbers for your strategy, you are set to trade blindly. You are trading without knowing what you actually trade. You don't know your expectancy. You don't know if your strategy will actually generate money or if it will lose money. Guys, if you don't know the results of your strategy, this is the source of problems. Let's say you have a loser, another loser, another loser, and another loser. And you may say, well, this strategy is not working, let me take another strategy. You switch to another strategy, and again you trade in some time, and then you have a loser, another loser, and another loser, and then you switch to another strategy. And you never give a strategy time for the edge to play out. You should trade in a strategy for a long period enough. You should suffer all these drawdowns. You should trade them through. How will you suffer this drawdown? How will you trade this through? You should be confident. Then overall, in a larger perspective, your strategy generates money. Look at this, 44% losers, 55% winners. So almost half of my trades are losers, almost half, slightly less than half of my trades are losers. But I know that they are smaller than my rewards, and I know that I have slight edge over the market, and because of this I end up generating thousands of pips during the course of 9 weeks. Let's say you just trade $1 per pip. This is your money management. $2,000 and $400. $2,400. Imagine that. I'm not risking that very much. Look at my position size. 0.02. Generating 43% return on investment. I didn't do that $1 per pip because I have started from this small amount, but imagine that you start a bit larger, that you start from 5k and you have 2.5 above it. That's amazing. This is something that I don't say that you should immediately adopt my strategy. I want to say that you should practice as much as I did. You should practice your backtesting to find your strategy, to know all your drawbacks and all your merits. You should know all of that. You should know the accuracy, the probability of winning, and you should know the risk to reward ratio. And I just shown you how you should evaluate your strategies. Yes, sometimes we have slippages. Instead of zero, rough zero, we have some negative, slightly negative. 3 pips slippage, 1 pips, 2 pips, 5 pips sometimes. Well, you can't do anything about this, but your strategy should recover that as well, and it does recover that. You can see the pips are generated. This graph says for itself. Whatever drawdown happens, it then recovers. Yes, we have a large drawdown, but it then will be recovered. Let's calculate the largest drawdown. From this pip, 2300 to this, 1850. 2300 minus 1850. What is it? 450 pips drawdown, then recovered. Now, what we have right now, 2469, 2024. 2469 minus 2024. 445 pips drawdown. Just imagine that you are trading 20 pairs and you have 400 pips drawdown. What will be your reaction? You just lost 400 pips. What is that? And if you trade, I don't know, $10 per pip, you just lost $4,000. What's your reaction? Will you drop this strategy away? You will say, oh, this strategy is bullshit. Of course, yes. If you don't know how the strategy works, you will throw it away. But if you know that your largest drawdown of 450 pips will be recovered, you know it based on your back testing, and you know it from your historical perspective because you did the forward testing, you've been trading that on small account or on a demo account, yes, and you know that sometimes you can have the slippage and sometimes you can have this thing, another thing, or whatever. Sometimes taxes are detracted from your overall results, sometimes swaps. We can have swaps here as well. You can see them. Some things that were not actually calculated on backtesting, but they can't ruin my strategy. My strategy has that power. It is strong strategy. So if you are looking to win, always win, 99% win, well, this is not the way you should do that. My videos won't help you. My videos only will teach you that you should accept your losses. you should know that 44% of the time you will have losses. Guys, I'm really just passionate about this stuff, sharing my views, sharing my opinion. This doesn't mean that you should adopt that. This means that you should know what is ahead. I've been practicing for 6 years now. Well, I've been practicing manual for about 3 years. Then I have developed my software, and I've been practicing with my software for 3 years. Imagine that. Only after 3 years that I have created the software, I can generate these outcomes. After 3 years. And I know that after 4 years it will turn even better. After 5 years it will be even better, because my skills becoming better and better with my software. So you should stop dreaming that let's say you will pay those $400 for my software and say, okay, Alex, you have generated $2,000 during the course of 9 weeks. I can do the same. No, most likely you cannot do the same. It is the same if you compare me and you. It is the same if we compare an ordinary man and an Olympic champion. Let's say I am an Olympic champion and you are an ordinary man. Yes, I have a bicycle and you have a bicycle, but I am winning Olympic Games and you can't win them because I've been training using my bicycle and you never trained. Although the bicycles are the same, the bicycles are strategies, or even my software. You have my software, I have my software. The bicycles are the same. I am an Olympic champion and you are not. What is the difference? Because I practiced a lot. So prepare for practicing. Prepare for that. Throw away your beliefs that you will buy the software and become a millionaire overnight. You need to buy the software and start practicing 10 hours again, 10 hours a day. I don't know. This is stressful. You should throw everything away from your life and only leave space for backtesting. Only in this case you can succeed. I agree, not everybody can do that. Not everybody. Trading is not for everybody. It can bring you lots of money, but it also demands your time. It demands your effort. First of all, during the course of your 5 years, your first 5 years, you will most likely losing money, and even if you don't give up, you will find your way how to manage that, and you will turn into a consistently profitable trader. Only after that, only after 5 years. So prepare for that. Don't sell your apartments. Don't make some loans for trading in hopes of turning a millionaire overnight. Yes, you should do some investments. Yes, it will give you an extra edge. Yes, of course, if you have a professional software, you have an edge over the majority of the market that doesn't have that software. Yes, if you have the best bicycle that Olympic champions use, well, you have the advantage. You have the edge over the other participants, but still you need some skills. You still need practice and practice. And if you have the software, if you have the patience, and you practice, and you have hard-working mindset, then, only then, all these skills multiplied will give you the result. Well, this video turned into some motivated one. Thank you for watching it. If you like this video, please comment below, click that thumb up, share this video on social media. Until then, good luck, good trading. Hope to see you next week.